Good evening, this is Rodney with the Triton Wave Market Outlook for Monday, September 17th, 2012. I first want to take a look at the big picture. Over the weekend I was looking at the S&P futures, and for a few weeks I've been looking at the relationship between the inside trend line that goes back to October 2011 and what it is right now with at top of the inside trend line. If we move this out a little bit, you can see that it's right up against this trend line, and it's also above the 8 and the 21 moving average, exponential moving average. Now it can come down to the 21, it can come to the 8, can come down to the 21. Right now it's 8 o'clock Central Time on Sunday evening, and we're down 325 on the S&Ps. But what I wanted to draw your attention to, which is even something that I really hadn't paid much attention to for a while, and even though my data only goes back to 1998, so the waves aren't complete. I'm not looking at this as a wave pattern so much as I'm looking at this the angle of ascent that these patterns have taken. This is these are like 3-year moves. This is a 5-year move from 2002 to 2007, and then down 2009, and now up here. So it seems to be a correlation between the angle that it moves up, and even though it's a 2-year span, the angle that it moves up versus the angle that it moves down. So it's a nice even pattern. And even here, it was a pattern until it reached the September crisis level in the banking system, and with Bear Stearns, and then it started tanking quickly. So if we look at this pattern coming up starting March 09 and up to this point, I'm looking for this market to go down for reasons that we've talked about before. Now this is a daily shot of, we've talked about the peaks that happened right around in here in April, which are these peaks. Let me see where April is here. March, April area. This is the Aussie yen cross. Risk off on the downside, risk on the upside, and these are 50% retracements, even though, and they're lead indicators, even though the S&Ps have gone to new highs. Now this is a matching. This came down here on September 3rd, and it's moved up steadily. It hasn't quite reached. It's like a 75% retracement of the previous high, which is still back here. In the meantime, the S&Ps have hit new highs. So in spite of the fact that the ECB with Mario Draghi and the Fed Chairman Ben Bernanke willing to buy bonds continuously to help bail out their countries, I think this market is coming down. However, as I'm looking at this on a weekly basis, nobody seems to mind that all this bailout and inflationary potential is happening to the market, and they just keep buying it. Well, here's a top in place on September 2000. Here's another top in place October 2007, and it is possible, if this doesn't turn around and go down, we are at a very critical area for this inside trend line, and given what's going on with the Aussie yen cross, we're at a very critical period of this coming down or shooting up. Now, of course, if you're short, if you're long, you have nothing to worry about. If you're short, you have to have stops in place. And currently I am only short, but I have stops in place for this eventuality, which is that this could actually move up to a triple top of 1566. I don't think it's going to happen. I don't see I don't see how it's going to happen, but stranger things have happened. So if this doesn't, since we're at a critical junction here, if this doesn't happen almost immediately, that's what we could be looking at. So let's draw this out a little bit. And that would be the inside track going all the way back to the beginning of this move in March of '09. So, with that, let's look at the daily. Let's look at a daily chart. Let's shrink this. Let's shrink this back to where it should be here. And let's look and see what's going on. One of the things I noticed on Friday was that between Thursday 8:30 in the morning and Friday 8:30 in the morning, this had a normal. This was a contracted area of volume because there weren't that many candles filling up on the 1597 on the ES. It was almost double that on Friday, so there is more activity, and also I believe the VIX was positive on Friday. So even though the market was up, that's not a good sign for longs. So I mentioned this on the ES because I just want you to be aware. It looks like it's time, a normal cycle for these waves to start cycling down, but it's not happening. And even though we're down 400 right now as we speak, there is that possibility that because this is taking out recent highs for the last 4 years, it could go up and match its old highs from 2000 and 2007. That is a possibility. I just wanted to make you aware of that. All right, let's look at some stocks really quickly. All right, I'm looking at Goldman Sachs here. That exceeded our expectation. I thought it was going to go up to 117. It went up to 121. That might, no matter how good something looks, it's never straight up. I believe this has to do some retracement of 5 or 6 points, even if you like it on the upside. Amazon continues to look good. It's hit a new high. What was the target of? I had it up here from before. 268. It's 261 right now. I believe it hit 264. 268 is a 1272 extension from last October as a high and January as a low. So look for 268 before. I think you should get out of 3. If you're in it since if you're following the daily waves on this, then you've been in it for at least a month at 231, and you should be out of 2/3 of your position at 269 and move your stops up to 260. All right, Baidu kind of surprised on the upside a little bit. It was at a perfect downward trend here. It was hitting 1-year lows, and then something happened on Friday, late Thursday, early Friday. The long wave T5 started hovering above 0 here, and it happened a little bit on T4, and I didn't know whether it was. I thought it was going to go up a little bit. I didn't know it was going to go up this much, but I covered my position at 108, and I locked in the profits. So that happened to be a great trade. I'm still looking for this to go down, but I'd like to see it come up a little bit, maybe to maybe extend over the 377 a little bit, and it looks like the next trend, the next line on the daily, the the exponential moving averages. It went through the 8 and 21. The next line is 55, and actually it could break up to 121, which is a 377 on the daily, and which would be a 50% retracement from the move down from 134. Netflix is definitely showing a spark of life here on the 21 cash price. The longer waves moved above zero, right about on 9/11 at $56. It made it up to 60, made it up to 377, and shot past it on Friday, up 252. So that would be a, I don't know, 5%, about a 4% move. And since this broke up between the 21 period, that actually might move up to 64. I wouldn't play this on the upside. Netflix is my favorite stock to short, not to go long. So I'm waiting for the short to appear again. Apple keeps moving. Again, I think it's a good day trading stock, but I wouldn't. Let me see what kind of targets I have here. I had a target of 675, and then when that broke through, 716, and I forget if that's a. Let me see what this is here. Hang on. Okay, so 716 is a 618 projection from previous highs. So it would be from this high, from this previous high back in April. So it may move up to 716, but I wouldn't play it based on the daily. I would play it based on the 21-minute, or actually the 1597, because that's a playable. 1597 is very playable for a daily trading, for day trading. All right, so the stock that completely surprised me in its direction was MasterCard. It looked like it was going down. If I move the daily out here, and you look at the way the waves are going, they all look like they're heading down, and this is where I picked it up as a short, and I was forced to cover. But you can see if I move this out, you can see the daily moves on it right at that point where it was going below zero, and all the short and long waves were below zero on the daily. And check out this move. So that completely surprised me. The waves tell you in advance what's going to happen. They're usually right. Sometimes something comes in and reverses the wave. GLD, the gold ETF, has maintained itself above the 377 on the 21-minute. And oops, let me fix this. Oh. And it's nicely above the 20. It's nicely above all the moving averages. Given the fact that the Fed is going to supply money to the system, and that the ratings for the U.S. bond market was dropped on Friday, right after Bernanke's announcement, day before, lends credence to the fact that fundamentally gold should keep moving up. I wouldn't chase it right here. I'd wait till it comes down to the 8 or 21 period moving average to get in on the long side. But I wouldn't chase this on the upside right here. Give it a chance to come down. Google X actually looks pretty good here. The T5, 4, 3, 2, and 1 are all above zero. Their T1 is starting to cave a little bit, but you can see that on this. Let me put in a line here. So from the time right in here on the left-hand chart, on the daily chart on Google, that Google starts trending down. We'll move over to the right side chart, the 21-minute chart. There are times to get in this and times to stay out of it. So on the way, even though this wave has been moving down slightly, it's still up. It's still moving up even though the wave is descending. So from this point on the right-hand chart is right there. So you can see the universal cursor on the daily, on the 21, and these are all individual moves that you can. They're like 2 or 3 day moves. You can get in since the daily has all their waves on the upside. You can just use the T1 on the 21-minute chart to get in, to get out. So you can actually trade these, like 2 or 3 day swing trades. You get out here, in here, out here, in here. This looks like it's ready to curve over, pull over a little bit, and it may happen, but you have to wait until T1 crosses back over. That's all I have for tonight. Good luck trading, and I will see you at the next update. This week should be fun. The volume is starting to pick up on the New York Exchange. It's up around 700, 800 million. We'll see if it continues. I know there's a religious Rosh Hashanah is going on the next 2 days, so there actually may be not too much participation. So the market may exaggerate its move in either direction. Have a good evening. Enjoy the rest of the weekend, and I'll see you at the next update.